Good morning, everyone, and welcome to the 114th episode of the Veritas Fact-Finding Series. And this morning, I'm joined by Professor David Ley. Good morning, David.
Good morning.
In each episode of the Veritas Fact-Finding Series, we go on the ground to speak to industry professionals in an unscripted, candid, live video format to discover how we can make better investment decisions. In this series, and with everything we do, we believe the facts empower investors and that better information leads to better investment decisions. If you're watching and you like what you hear, please give us a like and follow us at veritascorp.com. By way of background, my name is Anthony Scilipoti, and I'm the president and CEO of Veritas, which is an independent equity research firm based in Toronto, Canada. I'm proud to say, celebrating this year 23 years, 100% employee-owned and operated. Quick disclaimer, this broadcast is not to be taken as investment advice, and participants or employees of the Veritas group of companies may own securities discussed in this broadcast. While we love all our guests, and David in particular, this session may contain forward-looking statements, investment opinions, and comments that we may not agree with at all. Now, let me tell you a little bit about David, and I could go on for pages. I'm going to just try to keep this really tight. I'm going to start right at the top. David is a recent recipient and was appointed an officer of the Order of Canada, and I think that's an amazing feat. We were talking about that. He's had such an impact in the study of urbanization, social geography. He's Professor Emeritus at the University of British Columbia in Vancouver, where he lives. And he's either written or edited 10 different books, most notable recent ones, and very interesting to what we're going to study today and talk about. One called The New Middle Class and the Remaking of the Central City. Another one where he looked at and examined migration by wealthy families between East Asia and Vancouver, called Millionaire Migrants, tells the story of this migration and its impact. But most specifically, we're going to talk about his most recent book, which is Housing Booms in Gateway Cities, which examines the decoupling of housing and labor markets in gateway cities, Hong Kong, Singapore, Sydney, Vancouver, and London. We're going to put things into a global context. So lots of things to unpack. What's important today, we're going to discuss why do booms occur? What are the consequences of those booms? What has been the policy responses? And then as a result, what's a potential outcome? And we're going to take, what's amazing about this discussion is we're going to talk about the global perspective, okay? There's 4 different global gateway cities, as David describes them, that we'll use, or David will use as a backdrop, hoping to pull this back because what's most relevant to us, of course, is what's going to happen in Canada. So David, before we get into the meat of the discussion, why don't you tell us a little bit about yourself? And what I mean there is your story, how and why you became a professor, and we're so interested in the study of housing and urbanization.
Okay, well, thank you, Anthony. I have to think back a long time now. I grew up in the UK. I lived there till I was 21, then moved to the US for 4 years and came to Vancouver in 1972. So I've been around this part of the world a long time. I became a geographer because my DNA made me. My family have all been geographers. My aunt, who was the first one in our family to go to university, became a geographer and then a planner. My brother and sister were geographers. My cousin's husband's a geographer. So you get the picture. My DNA made me do it. But in addition to that, I have a curiosity. I've always had a curiosity with different places, what makes them what they are. And I think I was fortunate to have quite extraordinary teachers, both at high school and university, which cultivated that interest, which nurtured it. And I think that's pretty much why I am where I am.
Well, I'm glad you're here with us today then. Why don't you, we'll start off broadly, why it is, tell us about your book and why you decided to write it.
Well, as I said a moment ago, I've been in this area now for over 50 years. My career at UBC in the geography department there has been largely studying Canadian cities. Obviously, Vancouver has figured largely, but not exclusively in that work. But I decided that it was time to get some perspective. I had some perspective in time, and as you know, discussion around housing tends to be very present-centered. So I've been here long enough that I could get some temporal, some historical perspective, but I also felt I needed some geographical perspective. So I looked around for a set of other cities that had enough similarities to make comparison realistic, but also enough differences that I felt I could learn something about Vancouver and perhaps Toronto as Canada's two primary gateway cities from looking at these four other places. And that was a rather naive thought about 10 years ago, naive because I did not anticipate how difficult this project would be. Getting to know well four cities in different continents well enough that I can say something interesting about them to people who live there and probably know them better than I do. So a very challenging project, but I'm quite pleased with the way it's turned out, and there it is. So perspective is what really, well, there's one other thing too. I shouldn't forget this. I realized that probably this project would be the last big project I would do. And I felt quite deeply that I wanted to do something that mattered to people. As you know, oh, well, perhaps I shouldn't say this, perhaps you don't know. The university world can get very specific, fairly ethereal. And I really wanted to get outside of the bubble and sort of engage issues that mattered and mattered profoundly to people in everyday life. And of course, living in Vancouver, there's not much that matters more than housing, the cost of housing, the availability of housing. So though I had done work in housing before, it had never figured quite as centrally as it has become in this project.
I love it. I remember well and fondly back in 2016 when you traveled to Toronto to speak at our real estate conference. And I guess I didn't realize it at the time, but now given what you've just told us, you were in the midst of doing this same project. And I remember you showing us, you know, you think we're in a bubble here in Canada. Let me show you what a bubble looks like in Sydney. And how about what a bubble looks like in Hong Kong, or how about Singapore? And you had pictures and stats putting us into perspective, essentially saying, we're just getting going. Like, there's so much more the room for this to keep happening, and we need to keep perspective, because you're right, we can oftentimes only see, we can't see past our nose. So, all right, let's walk through it and talk about these 5 cities. I should make the point that your study starts since 1980, and that's important when you talk about temporal perspective. So let's address these 4 questions, and I'll let you bring about all the examples as you see fit, and we'll go through it. So the first point is, why do booms occur?
Yeah, well, that is a quite fundamental question, and it's important to realize, and we all know this, but it's important to emphasize that booms were not created in our lifetime. There have been booms in the housing market, but also in many other assets going back for centuries. Yes. So that's one thing. But booms take a particular character at different points in time. And I think the almost continuous boom Well, especially in Toronto, of course, the 1990s, there was quite a bust, but we've been in a steady upward cycle since at least the 1970s. But that cycle has accelerated from I would say, from around the mid-90s onwards. And there are several factors that seem to be important in all of the cities I've looked at. One, of course, is cheap money. The fact that monetarist policy brought down interest rates to extraordinary, abnormal levels. I remember reading somewhere that in the UK, interest rates were lower than they had been for 300 years. And I mean, here is one case of getting a perspective on the present, because we have become so used to low interest rates in the last 25 years, there's a tendency to think this is the norm. It is not the norm, it is abnormal. And unfortunately, people who have adjusted to this as the new normal are likely going to be sadly disabused. So cheap money, and not only cheap money, but lots of money. And here, the stimulus activities, first of all, associated with the big bust in 2008, 2009 in the world economy, that new term we had to learn, quantitative easing, which generated so much capital that was seeking assets, of course. And then again, the new pouring out of stimulus money during the pandemic, which created its own little pandemic boom, which we're still living through now, or at least living through the consequences of. So that's an important issue, what I've just said, because cheap money made people look for assets to invest in, and property became a primary asset. And this was facilitated by the globalization movement, which took root in the 1980s. We think of NAFTA, for example, the FTA and then NAFTA, just as examples, big examples in Canada of globalization. But what I discovered is how significant the globalization of the real estate sector has become. We tend to think of development as a homegrown activity. We get to know the names of local developers and real estate companies, but we lose sight of the fact, or are not aware of the fact, that there is an immense international activity in the real estate sector. And this shows up in terms of investment flows, so that the people who are looking for assets are not only, in the Canadian context, people who live in Canada. There are people elsewhere looking at investments. I like to quote a talk that was given by the head of BlackRock in Singapore in 2015, when, of course, as the head of the world's largest wealth management company, he was asked, where should I invest? And his answer was, I have two areas that I would bring before you. First of all, art products. I see great potential for inflation of value, inflation of price. And the other is real estate. And he said, and I'm virtually quoting him here, he said, I would recommend condominiums in New York, condominiums in Vancouver, condominiums in London. So there you have it. A Singapore conference, a New York a wealth manager, And he's talking about global investment, which of course, one of those three is Vancouver. This is why that quote caught my eye initially.
Yes.
But we're talking about a global investment world. And what I also found, in addition to this, was that not only is investment by private individuals or companies global, but so is the globalization of the development sector itself. And development companies have gone global. We have, I would say, modest examples of that in Canada, where a number of the bigger development companies have moved south to the US. But you go to East Asia, where the largest development companies in the world exist, in Hong Kong, Singapore, and China, and their scanning is global. I was surprised to find, for example, that just after the big bust in 2008, 2009, and of course, the loss of real estate value, particularly in the US and the UK, that 10% of all completions of housing in London immediately following 2008, 2009, 10% were being bought by people who had addresses in Singapore or Hong Kong. I found that pretty remarkable. But in addition to that, Hong Kong, Singapore, Chinese developers came to London as well.
Yes.
They knew there was an investment market there. And of course, they brought with them a list of investors, of local investors. And for Hong Kong and Singaporean and Chinese investors to be able to buy through a Singaporean, Hong Kong, or Chinese developer was a real plus. So the developers followed the investors, and then the investors followed the developers. And so you had a cycle of global investment following in these gateway cities. Now, I'm sorry, that's a long answer to your question, and I'm not quite finished yet, but do you want to break in, Anthony?
No, I don't want to stop you.
Okay. I would say, as we're looking more specifically at Canada, though there are similar stories to tell in other countries, accommodating policy is also a part of the boom scenario. At present, for example, immigration policy is clearly going to impact most likely the rental market, because this is where new immigrants first of all live, and there's already huge shortages in the rental market. But if we go back in time, and that my study, as you said, starts around 1980, we find the business immigration program, an immigration program that was established by the federal government specifically to bring successful entrepreneurs with significant capital to Canada. And the intention was that they would invest in manufacturing or resource extraction. That was the plan. The outcome, as we all know now, is that the investment went primarily into real estate.
Yeah.
And though the numbers at a national level were not that high, these immigrants concentrated their location in Vancouver and Toronto. And in those two cities, and especially Vancouver, where the wealthiest ones lived, they had a really significant impact. So here, just within the immigration portfolio, are two examples of how policy has affected the housing market. Another one, of course, is the ending of the social housing building programs in the 1990s. I think it was the 1994 budget. And that then, as that new development of affordable social housing was removed, of course, market housing became the only game in town. And so additional demand was drawn into the private market with the absence of new social housing units. So I think that's probably enough to be getting on with.
Sure. So
there are other things we could mention, but those I think are pretty important.
And I like the way you started. You said it's not something new. In fact, one of my favorite books, and I've said it oftentimes here during my show, is Popular Delusions and the Madness of Crowds.
Yes.
And I'm sure you're familiar with that. And that book goes back thousands of years, to go back to when it was tulips, when it was the South Sea bubble, and right. So forth. There's nothing. The only thing consistent in every bubble is that humans are there, and they will always go for when there's FOMO, and that's been fueled by globalization, as you point out, cheap money. And I think the next couple of things you're going to talk about more specific, because they're very relevant to Canada, but the social housing issue, immigration, and this concept of market type housing as opposed to social housing. I know that's going to come up as we talk. So why don't we take the next point? So what are the consequences of these booms? I saw a study that said, if we look at the history of the last few hundred years, we went from a period when farmland was the main staple of wealth on a global basis, to today, it's actually real estate that is the main stable of wealth on a global basis. It's incredible.
Yes.
So what are the consequences, aside from the obvious numbers?
Yes. Well, those numbers are important. I actually got information just yesterday from one of the London international real estate consultants. I'm on their mailing list, and they were showing in 2022, it's not just real estate, it's residential real estate that is by far the biggest source of wealth globally. Bigger, I think it's 3 times bigger than the global GDP, infinitely bigger than the value of all gold that has ever been mined. Bigger than the equity market, bigger than everything, in fact. So it is worth pausing. So there's my pause, and just noticing that point you raised. But the consequences, I think the consequences probably are familiar to us. The most dramatic is that the old rule about the interlocking nature of housing markets and labor markets, the economics 101 proposition, is no longer true. We do not have, in fact, the phrase we use is there's a decoupling of housing markets and labor markets. In other words, people's incomes in a particular location no longer qualify them for home purchase in that location, or indeed, increasingly, even rental tenure in that location, because it's factors now that are bigger than the locality that are driving the housing market, which is why, what we said a few minutes ago about globalization is important. There's a scale change, and labor markets are local, but housing markets are national, indeed global. And so that decoupling has caused all manner of unfortunate consequences. The one that's talked about perhaps most often is the affordability issue, which comes directly from that. Implicit in the affordability issue is an inequality issue. And there's been a lot of concern about growing polarization in society, and in particular, how it's not randomized, but it's very systematic. polarization affects two groups of people, two large groups of people, younger generations and newcomers to the market. They are the groups who are most penalized in the current relationship we have between price and income. The generational issue has been of some interest to me, and in the Hong Kong study, and this leads into another issue, in the Hong Kong study, it is, I think, no accident that it is university students who have been so involved in the protest movement in Hong Kong, because Hong Kong is a city that does property. It's been called a property state. And if you're cut out of that property market, that is, if you're cut out from the potential of buying your own flat, you really are a nobody in the Hong Kong context. A nobody in the sense of someone who is a university graduate and who has legitimate expectations to be moving into owning their own flat and into middle-class status. But that has been removed from a whole generation of young men and women in Hong Kong. And I would not for a moment say that this is the only factor that lies behind the protests, but I do think it is of significance. Let me see if I can remember the figure. The purchasing capacity of students, of graduates, university graduates in Hong Kong now is only 25% of their peers 30 years ago. That's an extraordinary decline in life chances. So I'm here presenting rather a dramatic example, I think, of polarization. But I do think that social order is an issue that we do need to bear in mind, that polarization eventually will not be anything that people can accommodate. And today they're accommodating it in many ways. So as we talk about consequences, is it a coincidence that family sizes are declining as rapidly as they are, especially in cities? It's not a surprise to us when to live in a city today, a family needs 2 wage earners. That wasn't the case 40 years ago.
Yeah.
They need 2 wage earners. And where then do children fit into that pattern?
Yeah.
The cost of children, the cost of one partner being absent, if only temporarily, from the labor force. I mean, I think this is one consequence that probably is a bit less obvious to us, but is certainly there. For another side of polarization is people who fall off the housing ladder altogether. And this group is growing as the bottom level of the housing ladder is being systematically removed through demolition and redevelopment. So rooming houses, very cheap, older apartments. These are the candidates for urban redevelopment. And of course, in growing cities, there is always urban redevelopment.
Yes.
So as the most affordable properties are lost, we have a growing homeless population. It's obvious when you think about it. But that too, I would see as a link. Those people who manage to get into the market, who struggle, first-time home buyers, who struggle to get in at enormous cost, mortgage debt. Mortgage debt in the US now is 70% of all household debt. and it's been doubling the rate of inflation over the last 30 years. So the level of mortgage debt has been increasing twice as much as the inflation rate. So we are a nation of debtors. So here are some consequences. Again, we could think of others, but that's certainly some that I see as significant.
But what I sense, when I hear those type of consequences, and obviously living and having traveled to some of those cities that you mentioned, this decoupling, this inequality, the affordability issues, how you said it's systematic, younger, new people, and those newly entering markets, the family size is declining, leading to homelessness. But you touched on one thing that we have a hard time measuring, but that's social unrest. And you mentioned what's happening in New York, in Hong Kong, but it's not just happening in Hong Kong. We're seeing, various rallies happening in many parts of the world, and whether they're supporting some cause, be it a particular war or group that they feel is being oppressed in parts of the world, or whether they're just, they can't find housing. Part of a tent city that we're seeing, or even maybe East Hastings itself, is a protest. It's something saying, I'm out here because there's no place and nowhere for me to go.
Yeah, I would agree with that. Obviously, people's motives are complicated, and I had to develop the argument rather carefully in the Hong Kong context. It's not a single factor, but certainly housing globally is a big deal. Though I have concentrated on these gateway cities because they are the cities that are most open to international forces, immigration and international capital flows, trade, and so on.
Because if they didn't have that, if it were contained to just the local population, let's say, without outside forces of globalization, then the let's call it the decoupling that you speak of between income and house price, if you will, perhaps doesn't happen, because there's no outside force aside from cheap money. There's no outside force coming in with a different cost of capital.
Yes, that is true. I think something I've underestimated in the past is the fact that there's national investment as well as global investment.
Yes.
So the relationship between the housing market and the labor market is not undermined simply by global investment patterns, but also national investment patterns. I mean, as we know, the pandemic boom was largely driven by Canadians. I haven't seen a lot of discussion about the role of international capital there. So there's a significant role that's national as well as global.
And I think part of that is that FOMO concept. We've seen everybody make so much money, and then not even COVID could bring down the housing market, and so we better get in now, otherwise we'll never be able to get in.
Yeah, that's right.
Okay, right. Let's move to the next phase of the study you've done, and so what has been the policy responses? And I know in this discussion, you can bring in lots of global perspective to what's happened in each of these different gateway cities.
Yes. Well, of course, government has been very busy over this. And we have different levels of government. They've all been busy. They have somewhat different areas of responsibility. So this is really an endless question. I'm not sure how many days you've set up for this webinar. But if we just look simply at demand and supply, that's probably an easy way to think about policy. I think in many ways government likes a booming housing market. It likes it because it's a sign that the economy is alive, that wealth is being created. And certainly that was the case in BC up to about 2017. There was not even a perception that there was a housing problem, because a booming housing market suggested a booming economy. And, surely that's great for everybody.
Property tax, sales tax, transportation spending, spending on all goods and services. Everything's growing. Everything's great.
And transfer taxes for government.
Of course.
The transaction taxes, property transaction taxes. But when this uncoupling became severe enough, eventually the BC government had to act. That was still then the Liberal government, the Liberal provincial government, and the NDP government came in after it and extended this pattern more forcibly. And what I'm getting to here is that taxation on demand is a major response by government. The term you hear is cooling measures. We want to cool the fire, cool the heat. And a series of taxes are introduced, most simply taxes against foreign ownership. Now, this has been done in every city but London to a greater or lesser degree that I looked at. Mm-hmm. The most dramatic example is in Singapore. And I learned more from Singapore than I expected, because as one author on Singapore has put it, Singapore has solved the housing question. A statement like that catches your attention. Because Singapore is a wide open city. It's a very successful city, a very wealthy city, globally couldn't be more connected. But what are they doing? Well, first of all, on the supply side, it helps that pretty much all of Singapore is publicly owned land, so that if you purchase, you're purchasing leasehold. So that gives considerable leverage to government. But still, there's this capital flowing in, and especially during the period of quantitative easing, enormous amounts of capital were looking for Asia Pacific, because that was a growth area. The economy was on fire. This is where investment opportunities existed. So what did the government do? Well, about 80% of the housing market in Singapore is publicly owned, though leased to individual Singaporeans who can buy and sell it. The other 20% is privately owned, which is mainly for expats and for very wealthy Singaporeans who would want to buy a property which exceeds the quality or size that is available through the public market. Now, there is a linkage between those two markets, so that if the private market gets hot, then the leased market gets hot as well. It's not a perfect one-to-one, but there is seepage, so that there are effects. So it's been very important for the Singaporean government to control the market. On the one hand, they want there to be some growth of prices so that owners are benefiting, leasehold owners are benefiting. But on the other hand, they don't want the prices to go up too much, because then exactly the people who are being penalized here, the younger generation, people new to the market, they will suffer. So what they've tried to do is have a managed price growth. And they've done this through the most fastidious network of taxation policies. I quote the example when the market was heating up between 2008 up to 2011, the government brought in 13 taxation measures on property prices. So it wasn't just, the single bring in 15% tax on foreign buyers. They kept on ratcheting the numbers upwards until they reached an equilibrium where they felt they had controlled the potential for hot money to distort the local market. And let me quote you, and I have an exhibit here I wanted to quote from if this came up. How far will Singapore go in resisting this pressure of hot money? I've got a message here from Savills. This is one of the real estate consultancies. This April 2023. Headline news, Savills writes, Singapore hikes residential property tax, doubles foreigner rate, listen, to 60%. 60.
That's annual.
No, that's a transaction tax.
Oh, transaction tax. Okay.
Yes. Yeah. Transaction. No, there's a whole suite of other taxes. This is just a transaction tax. But it wasn't just foreign buyers who were taxed. For Singaporean citizens, purchase of a second property, the tax will be raised from 17 to 20% and 25 to 30% for their third and subsequent properties. So you buy your first house or your first flat in the Singaporean context, no transaction tax. But then your second, your third, there's a growing level of taxation, much heavier for foreigners than for local people. But do you know what? This is how the claim can be made that they have addressed the housing question, that housing is affordable.
But of course, that has consequences as well.
Well, let's hear about them.
So no longer, I mean, I'm sure many that owned land, the value of said land, perhaps, or property could have fallen. And if we're now entering a period where we've had this inflation and interest rates are higher, the costs for those landowners or those property owners that were landlords are now making it impossible for them to do business, and they've been basically pushed out of business by this policy. And is that fair?
Well, I mean, any property market has its ups and downs. It has its cycles.
Yes.
And the important thing is that in at least the medium term, prices are increasing. And of course, one of the nice things about taxation is that you can always reduce it again. And Hong Kong has just done this. Hong Kong had, they call them stamp duties not as severe as Singapore's, but more severe than we've seen here. And they've just reduced them because Hong Kong is going through a tough period economically. Yeah.
So let's take it now, because I think this transitions nicely to the outcomes. You've seen the potential. These are what the policy responses. So now let's talk about the outcomes as you see them, if perhaps we don't do anything.
Yeah. Well, the outcomes are that 4 of the 5 cities have not solved their housing question, and 1 claims to have done so. And indeed, in Singapore, there is not a decoupling, so that local wages and local house prices are in a position of balance, and if they get out of balance, the government is going to try its darndest to get them back into balance. The other four cities are the experience that you and I know so well. There's been a lot of hot air breathed by policymakers, and indeed some real things that have been attempted, but it doesn't seem to be doing the job. Affordability is becoming more and more of a severe problem, and that severity now is moving beyond the sort of the familiar culprits or victims, I should say, of Vancouver and Toronto. We're now seeing Halifax, Calgary, the Hamilton, Kitchener. You know, it's moving outwards now. The problem of housing affordability. So sadly, that is the dominant outcome one sees. My own view is that perhaps the policies are continuing to make the problem worse. And I'll just illustrate that from the city I know best, which is Vancouver, where the position of the provincial and the municipal government is densification at all costs. But what we're learning is that because of the high land value, it doesn't matter if you densify. Things are still unaffordable. So the argument here is the missing middle. And the missing middle is described as people making 30 to 80,000, people who are, you know, essential for the functioning of a city.
Yes.
Teachers, well, and so on. But the rental housing that's being built, if we go with the notion of 35% of income should be given over to housing, the rentals that are being built require 100,000. And the densification of single family property into 4 or 6 units, well, there's a house just up the block on a 66-foot lot, and 4 properties are being built on it. Well, I know that the cost of the property alone was 3 to 4 million. That's before the property is demolished. That's before any construction has begun. So how affordable are those 4 units going to be? They can't be less than $2 million.
Right.
So that's not working. And indeed, it's even worse than that, because what is not happening is the preservation of the most affordable units. And surely if you want to pursue affordability, you want to preserve what you've got. You know, the affordable units that are already there, they tend to be the older units. And I've come up with a maxim now that old is affordable, new is unaffordable when it comes to the Vancouver housing market. And there is no attempt to preserve old. That's strictly not correct. The provincial government has brought in a fund of $500 million, which seems like an awful lot of money. But with land values the way they are, it's not a lot of old apartment buildings that you can buy for $500 million. And what is happening then is that the older affordable properties are being demolished in this tremendous desire to densify. So that's a sad outcome of what is, I'm sure, a sincere attempt to address the issue.
So if we look at where we are,
Yeah.
In our let's call it economic cycle, and I even think social cycle, where now rates have risen, property values have declined somewhat to stabilized, but no longer going up, let's say, and there's no transactions taking place, because and so as a result of that, if you had to look forward 6 months, 12 months, what do you see happening, given what the study that you've done?
Yeah. Well, of course, there is still a lot of development activity underway, which was started when the market wasn't the same way that it is now. So presumably the stasis, the slowdown will be moving forward. Well, this could give us a breathing space. It could give us, we will get out of the constant movement upwards of prices, with, in particular, the mortgage rates will slow down, they will cool down. Price gain, indeed, will cool down, as you say, any kind of activity. So how are we going to take advantage of this slowdown? What new insights can we bring? One area that I would love to see some serious thinking being done around is, and I heard a webinar just yesterday to this effect, is to recognize that we're in an ecosystem, that housing doesn't stand by itself. It's connected to all kinds of other things. And in the policy sense, this means that if you admit 500,000 immigrants, that's going to have the most severe impacts in Toronto and Vancouver on housing markets that are already unsustainable. What is the case for 500,000? I don't think the Canadian people have heard what the case is. Why have we moved from 250 to 350 to 450? What is the case for having a higher immigration rate than any other of the G7 countries? I don't know the answer to that. I've heard, of course, vague comments made about replacement of the labor force. Well, of course, but who says that needs 500,000 rather than 300,000? Where is the evidence for that? And the other area where I would like to see some wise second thinking is the role of the federal government as a landowner, and the role of Canada Lands. Canada Lands that manages the properties or the surplus properties of the federal government. Now, Canada Lands has a mandate, and its mandate is basically to act as a private developer. It's supposed to maximize the economic return for the Canadian taxpayers. If you read its website, that's its mandate. I understand that, and that makes sense, but it doesn't make sense right now. It doesn't make sense right now for federal land which is held in Toronto or Vancouver or Halifax or Calgary, where there is a tremendous opportunity to build affordable housing because you do not hit this immense brick wall of existing land values. If it's public land, you don't have to marketize it the same way private land, of course, is marketized. But what do I see? Well, there is a big plot of land, you may know it, in Vancouver, called the Jericho Lands, on the west side of the city. It's owned by a consortium now of First Nations, but 50% of it is owned, I believe that's the proportion, by Canada Lands. A plan has just come out, and what are they going to do? 70% are going to be market condominiums. And this is of is it 20,000? I can't remember. It's big numbers. And here is an opportunity that is being missed. And it's the left hand doesn't know what the right hand's doing. I mean, there is the silo in Ottawa of housing. There is the silo of immigration. There is the silo of Canada lands. Let's put them together and see how they impact each other. So those are two areas that I would like to see a bit more reflection of impacts upon housing, as I say, specifically in Toronto and Vancouver, because these are two such popular destinations for immigrants.
We'll see if they can pull that off. I'm going to remind everybody, if anybody has a question here listening live, just hover over the Q&A logo at the bottom of your screen, type in your question, and I'll be happy to ensure that Professor Ley answers the question. So those are two areas you want to, and it's interesting, the left hand, you described more than one hand there between immigration and housing and public lands, which are there, three hands at least that are a problem. I'd even bring the economic hand generally, that I'm not sure that they understand how those other three hands are working, but we'll try to not make it too political. But David, are you concerned that given where we are as a result, I'm going to try to see if I can get you to give us what you think happens to our housing market here in the next within the next 12 months? Do you think we're in for a severe correction, or do you think we can get out of this?
Well, I'm perhaps not the best person, but everybody else is giving it a shot, so why don't I?
Sure.
It does seem as if we're in a bit of a period, a slowdown. I hear a lot about development permit signs, which are not, in fact, going to be actualized. Mm-hmm. Builders are drawing back. Where this will become very serious is in the rental market, of course. Because of the increase in demand we were just talking about from new immigrants. And it is immigration which drives population growth, of course, nationally, but especially in big cities. It's by far the biggest contributor. So I can't see any good news in terms of the rental market in the next 12 to 18 months. Partly because while new rental units are being built, as I said earlier, they are more expensive and they're being built at the cost of older ones, which are cheaper. So, I mean, you know, you put that together, it is a very challenging scenario.
And as you get into what could become a vicious cycle, if properties are too expensive for individuals to purchase, and or whether they're foreign or Canadian for that matter, then no new builds will take place, and you're seeing that as pre-builds are way down. And you said that developers are taking properties off the market or development projects, and that's taking place. So while we're building through projects that were sold 3, 4, and 5 years ago, we're not when I look forward to the next 3, 4, and 5 years, we could see that there's a slowdown in new housing units completions. And if that happens, then you run into a supply-demand problem again, and which could force prices higher. Yeah. Coupled with the problem that if rates stay high, then no one will be able to afford them. So it's...
Yeah, well, I mean, the last couple of months, building starts are down.
Yes.
So here's the beginning of that scenario that you've just painted. Yeah, I mean, this is also challenging because you say, okay, rent controls then. And indeed, we have rent controls effectively in Vancouver. And they're doing what they're meant to do. They're keeping rents down. Of course, for sitting tenants, new tenants, there's a big discrepancy now between rentals of new tenants and long-established ones. But if the rent control threshold is below the inflation rate, then this is putting a hardship on landlords.
Correct.
And this is going to make it more attractive for landlords to say, well, why am I in the red or only marginally in the black from my rental project? If I sold it, I can capitalize its true value. And what worries me a little bit is that this year we have rent control, which is has got the threshold considerably below the inflation rate. And I know from conversation with a landlord of older properties that that is exactly the position that landlord is in. And there's always people around looking to buy up old rental properties when densification, is so enthusiastically the order of the day.
But it's very hard to displace the existing tenant because the landlord controls, the tenant has the right to the property. And if the landlord wants to sell, they have to give notice, and they have to pay a fee to the tenant. It could be drawn out over months, and it's just a whole, like, the new buyer doesn't want to buy a building with the old tenant because then they have to assume the rent from the old tenant. It's not, although that sounds like it could work, it's difficult to make that happen.
Well, it's undoubtedly a huge hassle, but it's happening all the time. So
Yes.
they find a way. Clearly, the anticipated gain is more than the short-term pain.
And perhaps that's something that will happen here. So I'm going to launch our questionnaire here, so that everybody can tell us what a great job you've done, Professor, today. and I'll if anybody again has any questions, I'll open it up. Otherwise, I'll leave you with our three last questions that I always like to ask our tenants, our guests. A favorite book?
Yes, okay. I thought about that, and I do have one. I got to this book late in the day. The cover said they'd already sold 1 million copies. It's a book called The Return of the Prodigal Son that I read earlier this year by Henry Nouwen. Henry Nouwen was a Catholic priest. He taught at the Harvard Divinity School. And this is a fascinating book where he moves between the story of the prodigal son in the Bible with Rembrandt's painting, The Prodigal Son Returns, and then a contemplation by the author on the three characters in the book, in the story, and on the painting, the rebellious younger son, the rather resentful goody-goody older son, and the loving and hurt father. And he, I think, brilliantly examines then autobiographically in his own life the times that he has felt himself to be one of these three characters. So it's a wonderful movement, a triangulation, if you like, between the original biblical story, Rembrandt's painting of that story, and then Nouwen internalizes it and asks, what can we learn as individuals for ourselves from these three personalities? So Henry Nouwen, The Return of the Prodigal Son.
Wow, that's a good one. Thanks for that. Your favorite podcast or webinar series?
Well, I'm not answering that question.
Oh, that's right. Then I'm going to leave that one. And so I'll leave you with your favorite breakfast. and breakfast restaurant?
Okay, well, this is a Granny's Muffins on Granville Island in Vancouver, which is essentially a kiosk on Granville Island where you can buy muffins and coffee and just enjoy the ambiance of that fantastic location. But Granny's Muffins.
All right. Thank you very much for your time today, Professor. Keep it up, and we'll check back in with you probably next year and see what's as our housing market unfolds.
Okay, thank you so much. Bye-bye.
All the best. Thanks, everyone, and all the best for the holidays, and we'll see you in the new year.